If you're living on Social Security right now, this matters to you. January brings changes to when your money arrives. Not how much you earned. Not whether you qualify. Just the timing. And timing matters when bills are due. I want to walk you through January's payment schedule carefully, step by step, so there are no surprises. Because being surprised by your own income is the last thing you need. If you're interested in this topic, hit the like button, subscribe, and type "interested" in the comments. And I will give you a heart. Here are the exact dates Social Security payments will hit your account in January. January 2nd, for beneficiaries who started receiving benefits before May 1997. January 14th, if your birthday falls between the 1st and 10th of any month. January 21st, if your birthday falls between the 11th and 20th. January 28th, if your birthday falls between the 21st and 31st. If you receive supplemental security income, your January payment actually arrived on December 31st. That's because January 1st is a federal holiday, and SSI payments get moved to the last business day before the first of the month when holidays interfere. Most of you already received that payment, but I'm mentioning it because some people get confused when they see that early deposit. Why your birthday determines your payment date. This isn't arbitrary. The Social Security Administration didn't just pull this system out of thin air. Before 1997, everyone got paid on the 3rd of the month. Everyone. Imagine millions of people all receiving their payments on the same day. Banks were overwhelmed. Processing systems were pushed to their limits. It was inefficient and prone to delays. So the SSA made a change. They spread payments across 4 different dates throughout the month based on birth dates. This distributed the workload and actually made the system more reliable for everyone. If you filed for benefits before May 1997, you were grandfathered into the old system. You still get paid on the 3rd, or if the 3rd falls on a weekend or holiday, you get paid on the last business day before that. That's why the January payment for this group is January 2nd instead of January 3rd this year. For everyone else, your birthday locked in your payment schedule. And that schedule doesn't change. Your payment date is tied to when you filed and when you were born, and it stays that way. Understanding payment in arrears. Here's something that confuses new retirees constantly. Social Security operates on what's called payment in arrears. That means your January payment is actually for December. Your February payment is for January. You're always getting paid 1 month behind. This isn't the SSA trying to be difficult. It's standard government accounting. But it matters when you're first retiring because you need to understand there will be a gap between your last paycheck from work and your first Social Security deposit. I've talked to dozens of people who retired expecting immediate payments and then panicked when the money didn't show up right away. Don't be that person. Understand the timing and plan accordingly. This is why I always say you need an emergency fund before you retire. 3 to 6 months of expenses sitting in a savings account gives you breathing room when these timing issues come up. The 2.5% COLA and what it actually means. Let's talk about the cost of living adjustment for 2025, because there's a lot of misinformation floating around about this. The COLA came in at 2.5%. For the average retiree getting about $1,976 a month in 2024, that translates to roughly a $49 increase, bringing the average benefit to about $2,025. Sounds good on paper. But here's what actually happens. Medicare Part B premiums also went up. The standard premium for 2025 is $185 a month, which is a $10.30 increase from the $174.70 you were paying in 2024. That premium gets deducted from your Social Security check before you ever see the money. So let's do the actual math. Your benefit went up about $49, but your Medicare premium went up $10.30. Your real net increase is about $39 a month, not $49. I'm not telling you this to be depressing. I'm telling you this because you need to know the real numbers when you're budgeting. You need to know what's actually hitting your bank account, not what the headlines say. This is the reality of fixed income retirement. The COLA rarely keeps pace with your actual expenses, and Medicare premiums eat into every increase. The hold harmless provision. There's a protection built into the system that most people don't know about, and it's called the hold harmless provision. This rule ensures that your Social Security check never decreases from one year to the next because of Medicare premium increases. If you're receiving a very small Social Security benefit, let's say $600 a month or less, the hold harmless provision kicks in automatically. The system will cap how much Medicare can deduct from your check to make sure your net payment doesn't go down. Here's an example. Say you were getting $300 a month in Social Security in 2024, and after Medicare took their premium, you were left with $115. When 2025 rolls around with the COLA and the new Medicare premium, the hold harmless rule ensures your net check stays at least $115. You won't lose money year over year. This doesn't apply to everyone. If you're paying higher Medicare premiums because of IRMAA, the income-related monthly adjustment amount, you don't get this protection. And if you're brand new to Medicare in 2025, the rule doesn't cover you because you weren't in the system the previous year. But for those it does protect, it's a valuable safety net. Direct deposit is mandatory now. If you're still receiving paper checks, you need to switch to direct deposit immediately. As of September 2024, the federal government has essentially eliminated paper Social Security checks. The push is for everyone to use either direct deposit into a bank account or the Direct Express debit card. This isn't optional anymore. It's becoming required. You can set up direct deposit through your My Social Security account online. Go to ssa.gov, create an account if you don't have one, and update your payment information. You can also call the Social Security Administration directly at 1-800-772-1213. Don't wait on this. You don't want to be scrambling later because you didn't update your information. Direct deposit is faster, more secure, and ensures you get your money on time every month. There's no risk of a check getting lost in the mail or stolen from your mailbox. Can you change your payment date? No. You cannot change your Social Security payment date. I get this question constantly, and the answer is always the same. Your payment date is determined by your birthday and when you first filed for benefits. That's it. The Social Security Administration will not move your payment to a different week because it's more convenient for your budget. The system is set up this way for operational reasons. They're processing tens of millions of payments every month, and they need this structured schedule to make it work. But here's what you can do. You can adjust your bills to match your payment schedule. Most people don't realize that mortgage companies, utility providers, and credit card companies will often work with you on due dates. If you call them and explain that you're on Social Security and your income comes at a specific time each month, many of them will adjust your due date. I've seen mortgage servicers move due dates by 2 weeks. I've seen utility companies adjust billing cycles. Credit card companies will shift payment dates if you ask. It takes a phone call and maybe 15 minutes of your time, but it's worth it to align your bills with when you actually have money coming in. Looking ahead to 2026. The COLA for 2026 has already been announced at 2.8%. That's slightly higher than this year's 2.5%, which means the average retiree is looking at about a $56 monthly increase. But before you start planning how to spend that extra money, understand that Medicare Part B premiums are projected to increase significantly as well. The Social Security Trustees report estimates the premium could go up to around $206.50 for 2026, which would be a $21.50 increase from 2025. If you're getting a $56 COLA increase but paying an extra $21.50 for Medicare, your actual net increase is only about $34.50 a month. This is the pattern. Every year the COLA goes up and every year Medicare premiums eat into that increase. This is why you cannot rely solely on Social Security for a comfortable retirement. Social Security was designed to be a safety net, not your entire financial plan. The sooner you accept that reality and plan accordingly, the better off you'll be. Practical steps for managing January payments. Let me give you some concrete actions you can take right now to handle your January payment schedule effectively. First, write down every bill you have, when it's due, and how much it costs. Then mark on your calendar exactly when your Social Security payment is coming in January. If you're getting paid on January 2nd, you're set for early month expenses. If you're on one of the Wednesday schedules, make sure you have enough cash on hand to cover anything due before your check arrives. This is basic budgeting, but you'd be surprised how many people skip this step and end up with overdraft fees or late payment charges. Second, if you're married and both receiving Social Security, coordinate your payment schedules. If you're getting paid on different Wednesdays based on different birthdays, that can actually work in your favor. You've got 2 income streams at different times. Structure your bills around both payments to create more even cash flow throughout the month. Third, automate your bill payments. Set up automatic payments for regular bills on dates you know fall after your Social Security deposit hits. Most banks let you schedule recurring payments, and most billers offer autopay. When your Social Security check deposits, your bills get paid automatically. What's left is what you have for groceries, gas, and everything else. This removes temptation and ensures your essential bills get paid before you spend money on anything else. The bigger picture. Understanding your Social Security payment schedule isn't just about knowing when money hits your account. It's about taking control of your financial life in retirement. Too many people retire without fully understanding how Social Security works, how Medicare premiums affect take-home pay, and how to budget on fixed income. That lack of knowledge costs them money in fees, interest charges, and unnecessary stress. You don't have to be that person. You can be the person who has it all mapped out, who knows exactly when every dollar is coming in and going out, who can sleep at night knowing their finances are under control. That's financial peace in retirement. And it starts with understanding the basics of when you get paid and how much you're actually keeping after deductions. Planning beyond the payment schedule. Once you understand when your payments arrive, you can start thinking strategically about your entire financial picture. Look at your spending patterns. Track where your money actually goes each month. Most people are surprised when they see the real numbers. That subscription service you forgot about. The dining out that adds up faster than you think. The small purchases that don't feel significant but total hundreds of dollars over a month. When you're on a fixed income, every dollar matters. You need to know where it's going. Create a realistic budget based on your actual Social Security payment amount after Medicare deductions. Don't budget based on the gross amount. Budget based on what actually deposits into your account. Build in a buffer if you can. Even $50 or $100 a month set aside for unexpected expenses makes a massive difference. Your car needs a repair. Your prescription costs more than expected. Your property taxes go up. These things happen, and having a small cushion prevents a crisis. Common mistakes to avoid. Let me talk about the mistakes I see people make with their Social Security payments, because if I can save you from making these errors, it's worth discussing. Mistake number 1. Not accounting for Medicare premiums when budgeting. People see the gross Social Security amount and base their budget on that number. Then they're shocked when their actual deposit is lower. Always budget based on your net payment after Medicare. Mistake number 2. Forgetting about annual changes. Every December, you need to look at the coming year's COLA and Medicare premium changes. Don't assume your payment will stay the same. Check your notice from Social Security and adjust your budget accordingly. Mistake number 3. Not monitoring your bank account around payment dates. Glitches happen. Direct deposits usually arrive on schedule, but occasionally there are delays. Check your account on your payment date to confirm the money arrived. If it didn't, call the SSA immediately. Mistake number 4. Ignoring tax implications. Depending on your total income, some of your Social Security benefits may be taxable. If you have other income sources like a pension, retirement account withdrawals, or part-time work, you might owe taxes on up to 85% of your Social Security. Plan for this. Don't get surprised by a tax bill in April. Mistake number 5. Not reviewing your Social Security statement annually. Log into your My Social Security account at least once a year and verify your information is correct. Check that your payment amount matches what you're receiving. Make sure your direct deposit information is up to date. Confirm your address and phone number are current. These are simple things, but they prevent major headaches down the road. What to do if your payment doesn't arrive. If your Social Security payment doesn't show up on your scheduled date, don't panic, but do act quickly. First, check your bank account online or call your bank to confirm there's no deposit pending. Sometimes deposits show up later in the day. If by the end of your payment date there's still no deposit, contact the Social Security Administration immediately. Call 1-800-772-1213. The lines are open Monday through Friday from 8 a.m. to 7 p.m. You can also check your My Social Security account online to see if there are any alerts or messages about your payment. In most cases, payment delays are due to administrative issues that get resolved quickly. But you need to report it so the SSA can investigate and get your payment to you. If you're facing a genuine financial emergency because your payment didn't arrive, the SSA has procedures for expediting emergency payments. Explain your situation clearly when you call. Final thoughts on January 2025. January brings a fresh start, and for Social Security beneficiaries, it brings that 2.5% COLA increase. While the net impact is smaller than the headline number suggests due to Medicare premium increases, every extra dollar helps. Use this month to get your financial house in order. Review your budget. Align your bills with your payment schedule. Automate what you can. Build that emergency cushion if possible. The January payment dates are set. For those on the old schedule, that's January 2nd. For everyone else, it's January 14th, 21st, or 28th depending on your birthday. Mark those dates. Plan around them. And make 2025 the year you truly master your retirement finances. Financial security in retirement doesn't come from hoping the COLA will be enough. It comes from understanding the system, knowing your numbers, and planning accordingly. You've worked your entire life to get here. You deserve to retire with dignity and without financial stress. That peace of mind comes from knowledge and preparation. So take these dates, build your budget around them, and move forward with confidence. Understanding IRMAA and higher income beneficiaries. If you're a higher income beneficiary, you need to understand IRMAA, the income-related monthly adjustment amount. This affects your Medicare Part B and Part D premiums. IRMAA is based on your modified adjusted gross income from 2 years prior. So your 2025 IRMAA is based on your 2023 tax return. If your income was above certain thresholds, you pay more for Medicare. For 2025, if you're single and your income was above $106,000, or married filing jointly above $212,000, you'll pay higher premiums. These get deducted from your Social Security check just like standard premiums. The important thing to understand is that IRMAA can change year to year. If your income drops due to retirement, you can file an appeal with Social Security to have your IRMAA recalculated. Life-changing events like retirement, death of a spouse, or divorce can qualify you for a reduction. Don't just accept higher premiums if your circumstances have changed. File Form SSA 44 with documentation of your life-changing event. Many people don't know they can do this and end up paying more than necessary. Coordinating Social Security with other retirement income. If you have multiple income sources in retirement, timing matters. You need to coordinate your Social Security payments with pension income, IRA withdrawals, and any part-time work earnings. Many people receive their pension on the first of the month. If your Social Security comes later in the month, that actually creates better cash flow. You have money coming in at 2 different times rather than all at once. 4 required minimum distributions from retirement accounts. You can schedule these withdrawals to arrive at specific times of the year. Some people take monthly distributions to supplement Social Security. Others take quarterly or annual distributions. The key is creating a withdrawal strategy that provides consistent income without forcing you to sell investments at bad times or creating unnecessary tax complications. If you're still working part-time while receiving Social Security before full retirement age, you need to watch the earnings limit. For 2025, if you're under full retirement age for the entire year, you can earn up to $23,400 before Social Security starts withholding benefits. They withhold $1 for every $2 you earn above that limit. This doesn't mean you lose that money forever. When you reach full retirement age, Social Security recalculates your benefit to account for the months they withheld payments. But in the short term, it affects your monthly cash flow. The role of taxes in your Social Security payment. Many retirees are surprised to learn that Social Security benefits can be taxable. Whether you pay taxes on your benefits depends on your combined income. Combined income is your adjusted gross income plus non-taxable interest plus half of your Social Security benefits. If that total exceeds certain thresholds, up to 85% of your benefits become taxable. For single filers in 2025, if your combined income is between $25,000 and $34,000, up to 50% of your benefits may be taxable. Above $34,000, up to 85% may be taxable. For married filing jointly, the thresholds are $32,000 and $44,000. This is important for January because if you had taxes withheld from your Social Security in 2024, you need to evaluate whether that withholding was correct. You can have federal taxes withheld from Social Security by filing Form W-4V with the SSA. You can choose 7, 10, 12, or 22% withholding. If you didn't withhold enough, you might owe taxes in April. If you withheld too much, you'll get a refund, but you've been living on less money all year than you needed to. Review your tax situation every January. Look at your previous year's return, estimate your current year's income, and adjust your withholding if needed. Managing healthcare costs beyond Medicare premiums. Your Medicare Part B premium gets deducted from Social Security automatically, but that's not your only healthcare cost. You still have Part B deductibles, copays, and coinsurance. For 2025, the Part B deductible is $257. After that, you typically pay 20% of the Medicare-approved amount for most services. Many people purchase Medigap policies to cover these gaps. Those premiums don't get deducted from Social Security. You pay them separately to private insurance companies. If you have a Medicare Advantage plan instead of original Medicare, those premiums also get billed separately in most cases. Then there's Part D prescription drug coverage. If you have a standalone Part D plan, you pay that premium separately as well. Budget for all of these costs. not just the Part B premium that comes out of Social Security. Your total healthcare spending is likely much higher than just that automatic deduction. Keep track of your out-of-pocket medical expenses throughout the year. If they exceed 7.5% of your adjusted gross income, you may be able to deduct them on your taxes. Protecting yourself from Social Security scams. With payment dates comes vulnerability to scams. Criminals know when Social Security payments arrive and they target beneficiaries. Never give your Social Security number over the phone to someone who calls you. The Social Security Administration will never call you asking for your number or threatening to suspend your benefits. Common scams include calls claiming your Social Security number has been suspended, texts saying there's a problem with your payment, and emails requesting you verify your bank information. If you're unsure whether a communication is legitimate, hang up or don't respond. Then call the Social Security Administration directly at their official number, 1-800-772-1213. Don't call a number the scammer provides. Never send money to fix a supposed problem with your Social Security. The SSA doesn't ask for payment to resolve issues with your benefits. Be especially cautious around your payment date. Scammers know people are expecting money and are more likely to respond to urgent messages about payment problems. If you suspect you've been targeted by a scam, report it to the Social Security Administration's Office of Inspector General and the Federal Trade Commission. Planning for future Social Security changes. Social Security is facing long-term funding challenges. The trust funds are projected to be depleted by 2034 unless Congress acts. This doesn't mean Social Security will disappear. Even if the trust funds run out, incoming payroll taxes would still cover about 80% of scheduled benefits. But changes are likely coming. Possible reforms include raising the full retirement age, increasing the payroll tax cap, adjusting the COLA formula, or means testing benefits for higher earners. You can't control what Congress does, but you can control your response. Don't rely entirely on Social Security. Build other income sources. Keep your spending flexible. Stay informed about proposed changes. Every few years, the Social Security trustees issue a report projecting the system's financial health. Read these reports or at least the summaries. Understand the challenges and the potential solutions. The more you know about the system's long-term outlook, the better prepared you'll be to adapt if benefits change. Special situations and exceptions. Some beneficiaries have unique circumstances that affect their payment schedule or amount. If you receive disability benefits and you're approaching full retirement age, your disability benefits automatically convert to retirement benefits. The amount stays the same, but the classification changes. This doesn't affect your payment date. If you're receiving survivor benefits based on your deceased spouse's work record, the same payment schedule rules apply based on the deceased spouse's birth date in most cases. If you're receiving benefits as a divorced spouse, you can claim on your ex-spouse record if you were married at least 10 years and you're currently unmarried. Your ex doesn't need to have filed for benefits yet as long as you've been divorced at least 2 years. These situations don't change the fundamental payment schedule, but they can affect the amount you receive and how your benefits coordinate with other income. Building financial resilience on a fixed income. Living on Social Security requires a different mindset than living on earned income. Your income is fixed, so your focus shifts to controlling expenses. Look for senior discounts everywhere. Grocery stores, restaurants, pharmacies, insurance companies, many offer discounts for seniors. Always ask. The worst they can say is no. Consider your housing costs carefully. For many retirees, housing is the biggest expense. If you're still paying a mortgage, can you refinance to a lower rate? Can you downsize to reduce property taxes and maintenance costs? If you're renting, are you in the most cost-effective situation for your needs? Some seniors save significantly by moving to lower cost of living areas or by sharing housing with adult children or roommates. Transportation is another major expense. Do you really need 2 cars? Can you use public transit, senior transit services, or rideshare apps for some trips? Every dollar you save on transportation is a dollar you can spend on something else. Review your insurance policies annually. Shop around for better rates on auto and homeowners insurance. Make sure you're not paying for coverage you don't need. Cancel subscriptions you're not using. That gym membership you never use. The streaming service you forgot about. The magazine subscriptions that pile up unread. These small savings add up. An extra $200 a month in savings is $2,400 a year. That's real money when you're on a fixed income. Making the most of your My Social Security account. Your online My Social Security account is a valuable tool that many beneficiaries underuse. Through this account, you can check your payment history, get your benefit verification letter, change your address, set up or change direct deposit, request a replacement Medicare card, and get your Social Security statement. You can also start or change your federal tax withholding and report changes in your work earnings if you're under full retirement age. The benefit verification letter is particularly useful. Many organizations require proof of your Social Security income for things like loan applications, housing assistance, or other benefits. You can download this letter instantly from your account instead of waiting for the SSA to mail it. If you haven't created an account yet, go to ssa.gov and follow the prompts. You'll need to verify your identity, which requires answering questions about your credit history and providing personal information. Secure your account with a strong password and enable two-factor authentication if available. This account contains sensitive financial information, so protect it accordingly. Your next step. If this information helped you understand your January Social Security payment schedule and how to manage your benefits effectively, type "ready" in the comments below. It helps me know this content is reaching the people who need it. And if you want to stay informed on Social Security changes, Medicare updates, and retirement planning strategies that actually matter, subscribe to this channel. No hype. No sales pitches. Just clear information from someone who's been analyzing Social Security benefits for years. Share this video with anyone you know who's receiving Social Security. A lot of people are confused about these payment dates and benefit management, and clarity helps everyone plan better. That's it for today. Your January payment is coming. You know when. You know how much. And now you have the tools to make the most of it. Stay informed, stay prepared, and I'll see you in the next video.